Howard Lindzan is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions and securities discussed in this podcast.
Hello, this is President Donald Trump, and you're listening to Lindzanity with Howard Lindzan. I hate that guy.
Hey everybody, welcome to Lindzanity Season 2. Really excited today. Chris Bruno from Rally Road, one of Social Leverage's investments in our new fund, is here in the studio, and we're going to talk about collector cars, investing, and Rally Road. Welcome to the podcast, Chris Bruno.
Thank you, Howard. Listen.
So, Chris, you're in town from New York.
I am.
Where are you from?
Brooklyn.
And you started, I'm biased. I love all our children, some more than other. One of my favorite, coolest startups of social leverage investment is your company called Rally Road. So tell everybody, there's no rush here, it's a podcast, a little bit about what Rally Road is.
So I'll give you a little reciprocal. You're one of my favorite investors.
Ooh.
Not only in this company, but that I've ever had.
We haven't started the ambient Adderall thing yet, so we'll see how that plays out.
We'll see how that goes.
But before you take the meds that we've got here for you, let's give us your first, while you're still on your game.
Still on the game. Okay.
What is Rally Road?
Rally Road's a new stock market. Basically, it's in a marketplace where people can make investments that they were traditionally unavailable to them. So we take high-value, appreciating assets. Could be a collectible car, could be a piece of fine art, could be wine and whiskey, could be a vintage watch. We turn them into little mini public companies, and we allow ordinary people who could understand those investments, who are passionate about those investments, buy, sell equity in them, and trade it just like they would traditional equities.
And why cars?
Why cars?
Because you're starting with cars.
Yeah, we started with cars. We built a platform to do any appreciating asset, cash flowing assets as well. But we started with cars because, for a few different reasons. One of the mantras I always sort of went by back in my VC days and always was relevancy, differentiation, and can you own it? Yeah. And so for us, collectible cars, relevant to a broad group of people. 1 in 6 people in America consider themselves a collector car enthusiast in some capacity. It's one of the fastest growing segments of reality television.
Male or female?
I think it's just in period. Okay. Yeah. And so one of the fastest growing segments of reality television is watching live auctions of these collectible cars sell.
Oh, I didn't know that. What channel?
Discovery Channel.
Discovery.
Yeah.
Okay.
And even NBCSN is doing it as well. So there's a substantial following there behind these marketplaces. And they, we're here in Scottsdale with you. Obviously, they have the big auctions here, the Barrett Jackson, et cetera. Yeah. And you see a sort of thing happening where hundreds of thousands of people make their pilgrimage each year to watch this stuff sell.
Yeah.
So in terms of relevancy, we felt we had a broad group of people that would be interested in this. The media has done a great job of, creating this asset class over the past 10 or 20 years, and that became relevant for people. The differentiation is just the fact that collectible cars are interesting, and we opened a showroom in New York City, and you put a Lamborghini in there with the doors that go up, and that creates a conversation that the media has responded to and that our audience has responded to in a really meaningful way. And then can you own it is for us, it felt like a place where we could bring the best of the best to market day one.
Yeah.
And so the first deal we did was about $75,000 IPO.
Yeah.
But for what it is, a Lotus Esprit from the 1970s, it is arguably the best one on the planet. And I couldn't say that for some of the other sort of new investment vehicles, no pun intended, where adverse selection is a major problem they have to solve for. And so we felt really good bringing these deals to market where it's best of best. And then operating in a marketplace like the collectible car market where, it's relatively insular and it's relatively fragmented. And in a short period of time, we've had that marketplace become super responsive to us, which was important, as you know, from getting the business to zero to what it is today.
And so where are you today?
40
people. Look,
yeah. So about 10 million in assets under management, upwards of 40.
That's cars.
Yep. Upwards of 40 deals, and each deal is its own individual security, as you know. So 40 separate mini public companies operating on our platform, all of which are trading right now.
Right.
And so on the secondary market that we've the first ones to develop in our app.
So this is the key thing. People need to feel that there is that there is liquidity. So let's walk through that. I'm interrupting you, but let's walk through that and then get back to the company, or vice versa, whatever you want to answer.
No, sure. The liquidity we knew was critical from day one. So the two things we needed to solve for when we decided to create this business was, one, retail access, which is, if you're going to let somebody invest in it, we didn't want to be NetJets-esque, right? We didn't want to take something for billionaires that they do well and make it for millionaires. We wanted to make something that the ordinary person could have access to a great and quality investment. So retail access, shares start at $5 on our platform, go up to a couple $100. Literally anybody who's an investor can do it and be diversified in great stuff. The second piece was, it's not equity crowdfunding. You don't invest today and hopefully get more money back 5 or 10 years from now.
Right. People need to understand that.
Yeah. And so we knew that for it to work and operate, we need to solve for liquidity. So give people the ability to sell those shares in the interim, but also give a way to reprice the assets that's democratic and effective, right? To have price discovery behind what these things are worth at any point in time. And so that's the marketplace we developed. And so on our secondary market, the way we operate today is sort of periodically. It's called a trading window.
Yeah.
And so
I get an alert.
You get an alert somewhere between 6 and 9 times a year. Each of the individual assets, securities, et cetera, are trading on the platform. We open it up for a day, and it's like a little mini auction where you could see the book build for people trying to sell shares and people trying to buy shares. And based on the market clearing price, aka the price that clears the most shares at any point in time, we're repricing the asset and letting people to get out when they need to, and people get in.
Yeah. And so is this super efficient for any, like in the 10 years out? What's, assuming you've raised a Series A, you've raised a seed round. 10 years out, today you're 40 people or 30?
About 30. Yep.
Yeah. So 10 years out, what could Rally Road be? Like, what do you see it as? Given, like, you could pin your ears back and have enough capital and, like, give the people what they want.
Absolutely. So, I mean, the one thing to understand before I answer that is just a little bit about the platform itself.
Sure.
And so we're a bit different than, other financial access platforms in that we've had to solve for more pieces of the sort of value chain. Right.
So you're building the whole exchange.
We're building the whole, exactly. So we're the issuer of the securities, where, like Slack, direct IPO, right? We're the investment bank, Goldman Sachs. That's the advisor, the trusted brand that helps people connect with that. We're the stock exchange in the sense of the securities are listed with us. The access point, the retail brokers, the Robinhood, if you will, right? As well as the investor relations component, so experiential, the computer share. And so to put all those pieces together, we really believe we could create another financial system where, when young people today are talking about how they invest and how they access investments, Robinhood is their dashboard for equities, Coinbase is their dashboard for crypto, and Rally Road is their dashboard for all the other things, the alternative that should be in their portfolio.
That's where you see yourself.
Yep.
And I mean, I love that vision. That's where I see you. But is there not a possibility to offer, if your customers have $600,000 worth of cars or $60,000 worth of cars, isn't there a world that you also could let them buy stocks on your platform?
We could.
You could.
Yeah, we absolutely could.
And where does StockX and GOAT, do they fit in as a fourth paradigm in here?
I think they're on a continuum with us.
And those are sneaker exchanges.
Yeah, sneaker exchanges, but for the most part, they're selling the entire item. And their sweet spot is going to be, hundreds of dollars up to maybe thousands of dollars, right? The types of portfolios that an individual could actually afford.
People are just taking ownership.
They're taking ownership, but they're not even taking possession anymore in many cases, right? So they're buying the sneaker, leaving it with GOAT or leaving it with StockX, and just waiting for it. It's truly a transactional business, because why ship it and take the risk on additional provenance problems or having it leave the warehouse when you could actually have it sit there and be something that is, they're truly just trading on the in the out, right? On the bid and the ask. And so they put a financial paradigm around these types of, again, which are new asset classes that are emerging, but they sell the whole piece.
Yeah.
For us, we're in the fractionalization space, so we're starting at $10,000, let's say, and going up to multi-millions of dollars. So giving people, the more aspirational, the things that an individual, unless you're a billionaire, couldn't really afford, and certainly couldn't be diversified across.
And so you started the company what year?
In June of 2016.
And you've raised how much?
Just over $10 million.
And so with the $10 million, you've put together this team.
Yep.
It's a New York company. You're full broker-dealer?
We are not a full broker deal yet, but we work with several of them. And we're in the process of creating one so that we could control more of our ecosystem as we develop.
And the reason you do that is trust, or just legally you have to.
One, trust is it's more about monetization, truthfully, than trust. We work with fantastic broker-dealer partners, but as the platform develops and the marketplace becomes more liquid, there's more rationale for having additional licenses in-house versus externally to the business. So we think it gives us more strategic advantage at some point in the future.
So you're a retail direct-to-consumer investing brand is
Correct.
what I would say. And so, like you said, Robinhood's a retail direct-to-consumer investing brand, and so is Coinbase.
Yep.
Is there anybody else there that's interesting that you see in other vertical, like that are doing something interesting in this space?
At this point in time, I haven't seen many that have gotten real traction. I think a lot of people did an amazing job of opening up lanes for businesses like our own.
So inspiration from who, maybe?
Seed Invest,
Okay.
right? I think they've done a really nice job, of putting that together. Yield Street, right?
Yeah, doing well, I heard.
Doing really, really great stuff. Cadre.
Okay.
They're
doing it for
real estate, right? And so those are some of the businesses that I look up to, and I think they've done a great job of really trying to adhere to their underwriting standards to bring great quality investments to their people, to their members. On the liquidity side, I think we've pushed it a bit further, and on the full retail side, I know we've pushed it a bit further. And so that's some of the stuff that I look to them as great companies that have come before us that have opened up these pathways, and I think we've taken the next step in terms of keeping that connection and making the investment appropriate for the investor that we're talking to, which is the full retail investor.
Yeah. So, I think about Seinfeld, where Jerry's in the airport, and he's trying to book. I think they don't have his reservation. He goes, you know how to take the reservation, you know how to hold the reservation. So the question then would come down to, what do people want? So they bought this car. What are they expecting, and how do you communicate with them of how this product works?
Yeah,
because the joy is you push a button, I own a piece of a car,
Absolutely.
fantastic, and
Yep.
I can see my car theoretically at the store. But what else do you see is what people want with this product?
So yeah, they want. Well, obviously there's that emotional side to it, right? Being a part of something, and I think that's meaningful. There's the experiential component of it that you hit on as well. That is definitely meaningful. Coming to see it, coming to be a part of that community who did something together that they wouldn't otherwise be able to do, has been important to it. But the core of this is an investment platform where you get great diversified returns that are uncorrelated with traditional equities. So the pieces that we're giving them are ultimately, I think, most of our, the promise of liquidity is important. The ability to trade out when people need to as a retail investor is important.
Yep.
The ability to reprice the asset in a way that is that feels fair and transparent is really important. But I think many of our members are thinking, I'm going to be in this for the mid to long term, and ultimately we'll have exits on the platform. And so we've even seen that to date, where some of the 40 deals we've done have actually been transacted back to private owners.
Yeah.
And so we ultimately expect everything on the platform to find the right home at some point, and to do so when the time is right. When the right offer has been cultivated to take over that particular, car or watch or whatever it is in the future.
But cars, you chose cars for specific reasons. And so the size of the market is what, about 100 billion?
About 150 billion in outstanding collectible cars at this point.
And how much turnover? Because you chose
Turnover,
this.
yeah.
Is that one of the reasons you chose
It
cars?
is. Turnover is approaching 20 billion
So
a year.
20% of the cars turnover. Is this because a wife comes home one day and goes, if you buy another fucking car, I'm going to make you sell one car? Or guys just saying, I have enough, I'm not using it, I'm just going to, I love this car, but I got to sell this car?
Limited capital, right?
Yeah.
And interest change, and they turn them over. And the crazy part about it is because
That's good.
That's great.
Yeah.
Yeah, and the crazy part about it is most of the transactions, or the good part about it maybe even, is most of the transactions are happening peer-to-peer in some capacity, because the existing mechanisms to sell these types of assets are just so expensive and hard to manage, and misaligned in many ways with the interests of the buyer and seller.
Yeah.
And so that's a little bit of the dynamics in that market that we can really address. Is fine. Bring that asset to us, and then within a matter of minutes, exactly what it's worth based on what the investor population is willing to pay for it. You could decide if you want to sell 100% of it, 80% of it, 50% of it.
This is where you
when you really start to see that scale, and that, you know, that's where I think it gets to be, you know, incredibly.
But the guy could basically say, I plan on driving my car because I'm like Jerry Seinfeld,
Absolutely.
and the price will go up if I drive it, versus, you know, Mitch Kumstein. Meaning, it doesn't work if that guy's doing it, but if it's if it's Jerry Seinfeld theoretically, or Snoop, and he wants to sell his Cadillac,
those absolutely add value in provenance in that way. But you know, even Mitch can be managed in terms of trust by taking the brand that we've developed and making sure we put rules and restrictions the way the asset is used and cared for. And so that's a lot of what we're working on in the background, is how to build up the infrastructure to do that at scale and do that on a global level, where ultimately we take what we've produced here, proven has worked, curated really effectively, demonstrated sort of a new way of investing, and sort of created this category of investing. And then how do we take that and expand it and make it really scalable, where you know, you just really change the way business is done in a lot of these illiquid asset classes.
And so one of the next phases is watches, or is it Honus Wagner? Can we talk about any of the other stuff?
Yeah, you can talk about all of it.
So let's. What excited me was this Honus Wagner card.
Yeah.
So the new app, we'll do a demo. We'll weave it in here. The team will weave it in here. But so the adjacent categories here you see are what?
The ones we're going into first, sports memorabilia, premium sports memorabilia. So things like the Honus Wagner, the holy grail of card collecting.
There's what,
basically.
70 of them? Or?
They say ballpark 60 of them, but you don't know. Theoretically, if the perfect one ever emerged, nobody knows what it would be worth.
Got it.
And so vintage.
So none are perfect.
No, they all have their own little things. I mean, the reason it's so valuable is because it was kind of a mistake in certain ways.
So refresh on what was the mistake.
Basically, the athlete, Honus Wagner, didn't want his brand affiliated with selling cigarettes.
Okay.
And so they did these print that was associated with a cigarette brand, and ultimately that's where the cards were affiliated there. And so he pulled his name from it, and as such, they only had a very limited number of them that got pre-produced.
Got it.
That can never be found now. And so
because he wasn't like a famous player.
I mean, I think relatively he
famous
was,
player.
but you know, it's less about his athletic prowess and more about being a part of the story
and so how does this card come to be in your hands?
Well, so we're working with some fantastic suppliers, and in this case, a collector who came about the card several years ago. It's a pretty famous card, so I won't announce just yet exactly which one it is because they're so easily identifiable.
Oh, got it.
But it's got an incredible provenance that even just adds to the value in the terms of the way the card came back to market, how it was discovered, authenticated, and where it's been since.
And in the app, people see. It's just like a stock chart. People will see the story.
Exactly.
People will be able to see who owned it.
Exactly.
Where it changed hands. So there's a chart and everything explains this and pictures of your
comparable asset values and all of the pieces of the puzzle that we use to develop that investment thesis. So that's the core of the transparency that comes with the platform.
Theoretically, this goes public next month. When you dig to the public, you set your price, the shares get bought, and then what happens? The card sits where?
So the card, well, in this case, will sit in either a secure vault that we've established for this type, that you're caring for this in an insured manner, or it'll be displayed publicly through one of our experiences. So whether it's at a museum or it's at a venue,
because you could theoretically make revenue off that and share it with the shareholders.
We absolutely can make revenue off of that, and you know, and we're already doing so in terms of the collectible cars and using them as effective pieces to take to shows, to sell merchandise around, to build that community aspect of the business, which has been really valuable for the membership.
And what does the store do? I mean, I think the unique thing that I think what you guys do a good job, Rob Petroza, one of your partners, is the way you've thoughtfully thought about how do we, because this is an app.
Yep.
It's a complicated back end. So it's a very complicated back end in the sense of customer doesn't care. Like customers just wants the app to come on, show me my card. Can I trust these people? Buy? Can I sell it?
Yep.
And you have to convey
friction.
all that, which you guys have done. So, but behind the scenes, you've done some creative stuff around thinking through marketing. Why the store? Why Soho? Why do all this? And how did you convince your investors, et cetera, to do this? And what is it instead of? So let's just walk through the store and what you're thinking.
You know, like the complexity of the business and the way you describe it is a lot of the reason why we decided to go with some non-traditional mechanisms, right? As we've told the story, the amount of trust that comes from seeing the actual asset there live, it's immeasurable in terms of the value it creates, both with the media and being able to tell the story about what we're creating, but having the one-on-one conversations with our actual user base to see that connection, see that thing firsthand, and leave with something, that experience that goes with it, right? And it's just a much different it's a much different platform as if it were completely theoretical or completely digital in that sense. And so, for us, building a new category, you have to take the time to educate people. You have to take the time to have, feet on the ground, as they say, having those conversations and activating our core, authentic, organic user base that will continue to tell the story for us. The way you've done in the venture community is the exact same way our core user base that we've developed organically over 18 months of doing this.
Yeah, you don't want to pay for your users.
No, you don't want to. And they're doing such a great job. We've got 400 of them in a Slack channel that we communicate with. We've got individuals who are on a first name basis with us regularly, sending ideas into the platform, talking to Rob through Instagram, through Twitter, through all of our social channels. And it becomes such a vibrant access layer to getting good feedback loops and getting that feedback loop quickly to help drive the product that we're developing on top of it, and build that connection to a brand where people do truly trust us because they know what we bring to market is best of best. And there's no better way to do that than to show it and have the conversations.
So there's no minimums, no commissions, no management fees.
That's right.
So how are you thinking about the business of Rally Road? What is the business?
So today the business of Rally Road is on the sell side, being able to provide liquidity to the asset owners more effectively and more efficiently. So we're giving seller and investor best deal and making a small piece for doing so for ourselves. As the business model continues to develop, it becomes much more transactional in nature. So as we've added these new assets to the platform, developed a secondary market, the transactions on the platform are growing exponentially. And at some point, transitioning from a model where we're much more sort of auction based on the secondary market to one that feels very much like the NASDAQ or the New York Stock Exchange, more continuous in nature, is how we see monetization happening over time. And then also taking cues from some of our predecessors, Robinhood, et cetera, who've done such a great job of building a strong product and building a strong community who cares about that product and who promotes that product, and then leveraging that community to give us ideas around what features they'd be willing to pay for. What are the real pain points? What makes the platform more valuable for them? So developing some sort of subscription product in the future, is core in the back of our minds of how we're developing product around the business.
And there
right
could be
now.
something to the retail side too.
Well, I mean, we're making money on that already, and we don't talk about it as core because really what we see it as is let's make the collection profitable first, and that's something where again it drives community, right? So that's not our money, that's the collection's money. And the collection belongs to us, but it also belongs
so all that
to our
gear
members.
Theoretically is attached to one?
That's
or
it,
not?
yeah.
Or is it right now already, if it's a purple shirt, it's attached to that?
Yeah, exactly what it is.
Oh,
Attached
it is.
to the collection. And that the profit there, which is great, goes to caring for the collection and then ultimately driving dividends for the community of people who are building this with us, right?
So
that was the idea for Rally Road was
so if
behind the brand.
If I own the car, do I get like a K1?
It's not a K1. It just as if you invested in traditional equities, you get your 1099.
Okay.
If you get dividends over a certain amount in a given year, if you actually transact.
So that's complicated. You had to build that whole back end.
We did, yeah.
What's the average amount of people that own a car?
Average is probably 400 or 500 individuals in a given security
Per car.
Yeah, the most is upwards of 1,000, and the least is 70 or 80 people.
Right. And so is there a world where I can just come over we talk about this like a Carl Icahn button where you can't, no one can buy all of it up front, correct? You're not letting anybody.
No, we force distributed ownership on the initial
So
offer.
explain that, like in the
Right. So
why.
we max people out typically at 10%, sometimes a bit lower depending on the individual deal. So we have that distributed base of investors. If somebody wants to come in and buy 75% of a car day one, they might as well just buy the whole thing, right?
Yeah.
So we wanted distributed ownership. On the secondary market, you can acquire shares up over time, and if you buy them all, you could take delivery of the soybeans or whatever at the end. There's no problem doing that.
So, I mean, in the end, someone sees a car that they just have to have for their collection, they can buy
Absolutely.
the whole thing. They can't buy it at the IPO.
They can't buy it at the IPO, but
during the
thereafter,
trading windows.
They absolutely can, and we've seen that happen very quickly, right? And in a couple of our initial deals, the holding period was only 4 or 5 months on the platform. It traded once or twice, and then we had that exit.
The person called you, so they called you and said, "We're making a tender offer."
Exactly.
Okay.
And so it's a little bit different than a tender offer, because running a tender offer on a $100,000 asset is inefficient today. There are mechanisms, I think, that'll get better over time where we could have that true vote. But we've done, I think, a really a good job of integrating the syndicate into that decision making.
Yep.
So they feel like they understand why it's getting sold. They're excited about those offers, and then we all defer, us included, because we buy common shares with everybody in every deal. We defer to our advisory board to make that final go, no-go decision for us.
Yeah. And so you had this idea. What were you doing before you had the idea? Let's go back and talk about just being an entrepreneur.
So always in venture originally. And so I kind of came into this business a little bit backwards. So my first job was in venture, and so I just had a really great exposure with some unbelievable mentors who helped me see venture from all different sides, from fundraising from LPs to deploying capital to managing funds. I really just got a really nice diverse exposure to it. And I wanted to see it from the operating side because I felt to be really good at it the way you are today. You had to really live it and see it from the entrepreneur's side. So I've had a couple of different startups. One was a media platform, an online video. The other was a media investing platform where we use data to actually quantify media properties and then put our dollars behind them.
And so and was this idea just yours, or how did it come together?
So it was my idea originally, but as with anything, an idea is really just that.
Yeah.
The team that we put together are people that I've known for a very long period of time. And as a result of that, they were very impactful in defining what the mission ultimately was. The idea I had for a car stock market is just a fraction of what we've actually become today. And the timing around how to launch this and is very much a reality of the time we're in now, and what we've seen, and the fact that we've been talking about this for 5 and 10 years and felt like was the right time to move forward. The reason it works is because Rob, as you said, has been such a defender of the user and making sure that our product delivers on what we need from it. And the reason it works today and the innovation we have on the regulatory side is because Max did the hard work with the SEC when other people were raising $100 million ICOs in a weekend. And so that's really what defined what the platform is.
Because the number one
today.
thing I got at the beginning was like, oh, why isn't this on the blockchain? And I don't know what the hell I understand blockchain, but I don't understand it. What to derivatively explain to someone, first you got to do the leap of faith and trust Rally Road that you're going to send them money is one thing. But then to say it's on the blockchain, that doesn't make sense. So is that the number one thing you get? What's the number one thing that people who think they know your business tell you?
Yeah, why isn't it on the blockchain? Why didn't you tokenize it? And the answer is we essentially have. Right? I mean, we sell digital securities. What's the difference between if it's stored in a database or stored on the blockchain? Right? You can make the argument that
the database ain't broken enough.
Certainly at our scale, or many scales at this point. Many orders of magnitude of that scale. For it to not work as delivered, and to introduce additional layers of complexity when you're creating a new category just didn't make sense for us. And we struggled with that for a long period of time, but we I think ended up on the right side of it.
That was always what I always thought that was the easy decision that you guys made, but it was a hard decision because you're getting told a lot of things by a lot of different people. And so it's your third startup. It's your third startup?
Yep.
So is it easier or harder? Is there less pressure, more pressure? How do you feel as a founder? A third time around?
More pressure, truthfully. And my whole basis for this was developing a career that would allow me to have the opportunity to do this one. And so this is the one that combines,
because it's passion.
It's passion, and I really do believe in the underlying thesis that people shouldn't have to be all in with their finances. Right? I missed out on that. A lot of people I know have missed out on that because they had to make the decision, okay, I'm not going to do this because I'm all in, or I am going to do this and I got it a little bit wrong, so that's really bad for me, right? That's just not the way to invest, and I know you think that way as well, but that shouldn't preclude you from getting great quality investments, especially ones you can understand and give a shit about. And that was something that it was core to what I think should be created. And then coming from the venture world and seeing seeing innovation get financed and seeing how that's changed over time, this is just my my dream come true. So the obviously the pressure and the risk and reward are all higher, and it's something that I want to see happen for myself, my co-founders, my team, and that's that is definitely.
And so so you look at it, it's like the one for you, but I've been there with you working on it, on and off. And not a lot of people understand it still. So it hasn't been easy. Mm-hmm. So you get told no a lot. So how do you get through all that? Like,
we don't get told no a lot.
People don't just go, oh, I love it.
Right. We don't get no a lot.
It's not Robin Hood.
We used to call it the high five business because everybody, once they get it, they say, oh my God, this is amazing. Like, I can't believe you actually are doing this. But it takes the desire to invest intellectually in what it is, and to have the understanding of the underlying asset classes to really sort of get the aha out of it. Mm-hmm. And so that's been, and that's sort of why we've made deliberately some decisions to grow more organically, and that's been amazing because we've built this core foundation that's hard to replace, right? Mm-hmm. It's not easy to be all of those elements in the value chain of equity capital markets, to find the right partnerships, to build the right tech, to build the supply chain on assets, to build all of the pieces that go to make this function in a way that feels seamless to the front, to the end user. And we've seen the traction happen there, and that sort of has built such a nice core that we're really accelerating against at this point.
And what are the three metrics that you guys freak out about or monitor closely? What are the three things that matter to you?
Yeah, so for one, on the initial offering side, on the IPO, it's sort of velocity of capital formation is something that seems to get everybody excited, and also it's really core, right? And in the beginning, it'd take us 45 days to raise $75,000.
Yeah,
we do $75,000 in.
Because I think people, they need to feel that they checked in and missed it. I think flash sales. So if we think back to like my wife buying pillows at 1 Kings Lane, I would hear, and she's not into the stock market or anything. She doesn't invest. And I would hear her going, fuck, I can't believe I didn't get that pillow. I should have bought that pillow, because they'd have like 1,000 pillows on 1 Kings Lane, and you had to like click to get the deal. This is a little different in the sense that it's only one car, but people will click and check if it's selling out. So you have like a different dynamic.
Yeah, well, it's scarcity. It drives the asset class in general, right? And also the assets are scarce. The securities that back the assets are scarce, and the ability for people to get those is also scarce. And so that does in some way drive it. And so it's a metric that we do follow, is our ability. We've been very thoughtful, I think, about migrating the value of the assets and the type of assets we do as the platform is developed. And then the other thing we track, obviously, is liquidity. And so making sure that price discovery is democratic but also responsible, something we're really proud about, but also that the amount of turnover we're seeing is considerable. So people want to sell, they're able to sell. People want to get in, they're able to get in. That makes for a vibrant marketplace. And so those are a lot of the things that we're tracking, as well as the standard things that any consumer app would. In terms of customer acquisition costs, conversion, et cetera, and bringing people into the platform in a way that has longevity. What do those cohorts look like over time? And so that's what we're really measuring towards.
And then what about the car index in general? It's an interesting industry. Cars do appreciate. So there's a thing called the Hinckley Index. Is that what it is?
So there's a few of them. There's the insurance company Hagerty that specializes there, does a pretty good job of following each of the different assets. They're a little bit backwards looking in terms of where the data comes from. There's several other ones that rely more on individual experts. It's more like your Goldman analyst, if you would, right? Giving their opinion and overlaying that on where things are going. What we ultimately want to be, and we've become pretty quickly, is a resource for people making decisions at the margin about the value of these individual assets, right? So you could get a real valuation immediately from a broad group and almost force rank it in that way. And that's something that hasn't existed in illiquid assets before, and it's something we're proud to sort of be at the forefront of creating.
So if you had money today, and you live in New York, so you don't care about a car. If you had enough money today to buy a new car today, like what's
a new one today?
Just a new car today. Yeah. What is like a car that just makes you go, wow, it's a great car?
I'll be honest with you, I don't really like new cars anymore.
Okay.
The art of it really kind of got lost in terms of all the EPA regulations and then the safety regulations, and especially in the U.S. These are good things, obviously, and it's healthy for people. It's not good for the artistry of making fantastic analog things that are important and purpose built for what they were.
Is there a collector car that you could afford that you would drive every day that you have your eyes on? Is there such a thing?
Yeah, absolutely.
So is there one that you have your?
Yeah, so
Give me a couple ideas.
Yeah, so one of my favorite marquees is Porsche. I've followed them forever, and they've got some of the best for people who make a lot of cars. Truly, like they do produce them. They've got incredible resilience in terms of not losing money if you treat them nicely and buy them after the initial sort of depreciation hit.
Okay, so if you're buying a Porsche, thing is, don't buy it new.
Don't buy it new.
Wooter,
right.
Sucker. Just bought a new one. Our next guest bought one.
Right. Don't buy it new. Buy it a couple of generations out.
Yeah.
Buy a good quality one in the right colors. Treat it really well. Don't overuse it. Don't abuse it. And you usually get all your money back, and you get incredible utility. That was kind of the.
That's amazing.
What clicked for me was that
amazing.
exact fact,
Yeah.
right? Like so,
It doesn't have to be a turd.
No, right. But if you buy something nice, you could take your money and you could put it to something where you can use it and not lose money, and you could take the rest of your capital and deploy it efficiently against the best of the best, like we put on our platform.
Right.
The things that are impractical to own and are super rare should live in a museum anyway. And now you've taken your capital, you've maximized your sort of investment return, and you've maximized your utility return for the same amount of money. And that's something that always resonated with me in this platform as well. How can you do that, and how can you deliver those concepts?
Is there like a Honus Wagner of cars?
Is there a Honus Wagner of cars?
Like, is there this rare car that is worth the most money? Like, what is?
I mean, the one of one in collectible cars is probably the 250 GTO Ferrari. These sell now, private sales upwards of $70 million. For
drivable?
Very much so.
So people do drive them.
Yeah, absolutely.
So $70 million.
Yeah.
But people, and so what makes it $70 million?
Very, very low production. Incredible racing provenance, the Ferrari Marquis, storied history, just an unrivaled experience of ownership that's just impossible to sort of.
And if you were to drive that, what would the upkeep be a year?
Honestly, it's not as bad as you think. They're not overly complex. Obviously, there's specialists. Most people who have these do not drive them all over on the street. They bring them to shows. They put them on racetracks. So they use them in a very sort of specialized way. But relative to a $70 million price tag, it isn't appreciably different. The restoration process and having all the history and getting the right parts, that can be incredibly expensive. And those prices, the restoration prices, tend to follow the value of the underlying asset as well.
Yeah.
So as that migrates up, it becomes more expensive to restore them and more expensive to make sure you're doing it to the caliber that people would expect if they're willing to put $70 million into something.
And who are you seeing? Like, so you built the app. It's an incredible app. You go to Rally Road, Rally RD in the App Store. You can download it. Or Rally Road. You go in the App Store. Free app. You can deposit. How little? Well, you can.
So you don't have to make a deposit until you make your first investment. But
Got it. You can flip through all the cars.
You can flip through every single asset. Everything's made. Everything we give.
What's
to
cool
our
is now you can
investors,
buy on the secondary market. You don't have to wait. So
you have
theoretically,
to wait. You could buy in the secondary market. You could wait for an IPO. We run them almost every week at this point. And we'll be doing more and more as we introduce the new asset classes over the course of the month.
Yeah.
We really part of the educational process is not. There isn't pressure to do it. You can see all the information. You can make your determination if it's right for you over time. And we actually see that people hold an account balance, they watch a few cycles, and then they start to engage in a way that lets them test the waters, and they build account value over time. So that's what we hope people will do. We want them to treat this like any other investment, which is an important piece of their portfolio.
And what age group are you seeing? You have to be 21.
You have to be 21, but we have, I think, relative to many platforms, a young investor base. So our average age is about 27, and we definitely have people, a core group of people below that, and a core group of people in sort of the 30 to 50-year-old range. And then what's really interesting about the platform is in one asset. What I always liked about cars and these types of investments in general, they bring people together. And so in one of our deals, we could have the great Howard Lindsden and an 18-year-old and a 7-year-old gentleman all in the same deal, and that's something that I think is really unique. That people could come together, be a community that way, and do something financially that they otherwise wouldn't be able to.
In an era where maybe there's, I don't know, is there less or more cars on the road? In an era of Uber where kids are not driving. In the end, once a kid learns to drive, they love driving. They may have delayed it because of Uber, but my son didn't drive for 3 extra years, and now he just lives. Once you need a car, you love a car. But have you seen a change there? And just young kids, do they care about this industry? They care about investing, I know that, but are they just less interested in cars in general, you're finding? Or?
Not necessarily. I mean, I think interests are diverse, right? So, many of them are interested in watches and collecting vintage watches. And, as you start to go down these pathways and you find your way into learning about it, the enjoyment is, the history of it and where it came from and why it's important and why it's significant and why it led to us having a society that we have today in so many ways. So, I think that I definitely adhere to the investment thesis that the last of the analogs across many different asset classes are going to be truly meaningful and important to us, especially as you see that acceleration in cars going from something that's that you own and possess to something that's a pure utility.
The cars what's cool is every month or so you can bring in a new car.
Yep.
So you've come full circle. But my favorite thing of the whole idea, and because you guys have thought through this, is the idea. So Soho, it's on Lafayette Street.
It's on Lafayette between Prince and Spring.
Lafayette.
250
Lafayette. So if you're in New York, if you don't want to download the app, you want to go kick the tires, you can go say hello to the team. They work upstairs, so it's like office/retail.
Yep.
Company's located upstairs. And you can go take a look at the car, buy some merchandise, kind of learn how to use the app. I think this is the future of all types of investing, right? I walk in Midtown, I see an E-Trade store, and it makes me cry. It's like, it's like the old commercials where the guy Indian saying and someone throws garbage out of the side of his car. It's like I look at an E-Trade store and it makes me cry. It's like a lonely place. No one's going to go in and talk to their E-Trade person, but they have all this real estate and they have endless product, but there's no relation to the brand.
Right.
With this, the idea is people come see the car.
That's right.
Come talk to the expert about the car. You're not being all things to all people. So I would really urge people to do that. Congratulations on the progress. Not an easy, from how to design it to make it feel usable by the consumer. Complex things it takes a little while. Is there anything I missed? Is there anything I missed about the company that maybe you talked about or anything in?
No, that's right on. We appreciate that.
Okay, so you got lucky. No Ambien or Adderall. I'm taking it easy on you because it's midday.
We've got a long day ahead of us. Right?
It's midday still, but you were willing to play the game, so that
anytime
that matters the most. So again, Rally Road, the store. Thanks, Chris, for coming by.
Thanks for having me, Howard.
And
thanks
everybody
support.
for listening to Lindzanity.